Pete Eggers, ladies and gentlemen. How are you doing today, Pete?
Doing pretty good. I like that intro. That's nice.
All right, cool. We were just talking about a little hip hop before we got started and Dave Matthews and country music and all kinds of other stuff. So I was expecting you, Pete, though, to bob your head when you saw the music coming on, though, or,
Yeah,
or
I
you,
didn't know.
when you
I
heard it.
was
When you
about
heard
that
it.
a little bit.
All right, all right. So, Pete, welcome to Lending with Purpose. These are conversations that we have with clients and friends. It's intros to various forms of information and professionals like yourself, Pete. Especially the resources that that you have, that we use, that we look for, that we never knew existed or wanted to learn more about. And so thank you for your time today. uh, I
Yeah,
usually start off with a quick story. I'm going to tell that story later on in the conversation, but I have it like a did you know. You were the very first interview that
you
I
know it.
did on LinkedIn Live, number one.
You know it.
Th- I've done 96 of these,
Wow.
and you were the very first. I was going to look back. I went on a little bit of a health journey, Pete, and so I went and I looked back, and I had these puffy cheeks, and yeah, and I didn't. So I set up a little studio in the basement. Gotten a little lazy lately, and going down there, and I looked, and I didn't have any background or anything. It was just a
Oh,
reclaimed wood up,
yep.
and it was right in the height of the pandemic, and we did this. So welcome back, man, and thank you so much. And it's been a long 2 years, very eventful though.
Yeah, for
Um,
sure.
but yeah, I didn't know if you knew that you were numero uno. The very first show that we did, I didn't have a name for this or anything, and here we are.
No, we just jumped on and I think winged it that day. That was what we were doing. So I don't think we even had a microphone like that. I think it
I,
was us on a Zoom and doing what we can do.
Yes, sir. Yes, sir. So, hey, man, I still haven't mastered the art of the introduction this way. So it's easier for people to tell us who they are and what they do. So, Pete, I'd ask you, Pete Eggers, tell us who you are, what you do, and then we'll get into our conversation.
Yeah, for sure. Well, no, I appreciate you having me on again. So yeah, almost number one and number 100. So hopefully maybe at number 200 I'll have to come back, right?
Yeah, that's
Uh,
all right. That's right.
But no, what I do, my name is Pete Eggers, and I do business development for my credit guy. We have offices in Arizona, where I live now, and then offices in Iowa, and then some people out in Florida too. So we're all over the country. We do business in all 50 states. So we help consumers, people that are trying to become homeowners, people are just trying to figure out the credit game and trying to get their finances in order, basically. But really all about education, helping people fix credit. We just try to do that, on a day-to-day basis and help as many people as possible. But I work with a lot of lenders, a lot of realtors, and then just everyday people that have questions about credit. And then if we can help them become homeowners or just answer questions, that's what we're here for. So it's I've been doing it for about 5 years. Our company's been around for about 7 years or so. We've helped. I mean, every single month we have over 100 people that become homeowners because they get their credit in order. So it's pretty cool to see someone that transition from, you might have had something happen in your life originally, whether it's, you lose a job or a divorce or just some life stuff, and sometimes things happen with credit, but you can fix it, which is good news for a lot of people. And it's just more about education and learning the game and how to go about that. So that's really what I do on a day-to-day basis, to just help people and educate people on credit.
Yeah, that's awesome, man. You all make it very easy to refer you. Like you mentioned with the education piece, it's not this network marketing kind of situation where you're trying to get people in and then you're pounding on them to kind of sell your services and stuff. This is a true service to help people and to educate them on how to rebuild, repair their credit, or just improve it in some way, shape, or form. The other thing, you didn't really tell us much about who you are. Ladies and gentlemen, if you see this guy on the basketball court, uh, don't be fooled. You should run away, or pick him on your team first. And then I ask him on the, I think I asked you like, how do you play or something like that when I asked you about golf earlier. And you're like, I'm okay. And I said, well, what does that mean? He's like, I typically shoot about 8 over or something like that. So if anybody's familiar with golf, It's pretty tough to shoot like in the high 70s and the low 80s when you play golf. So Pete's quite the athlete. So if you see him at any of the events out there, just in general, don't be fooled by this guy. He'll take your money playing golf, and he'll school you on the basketball court.
Hey, I'm getting up there a little bit. At least I can still play a little golf. You know, my basketball days are behind me by the last like 6 7 years. But horse and golf, I can do that still. I can do that a little bit.
That's funny. That's funny. So, Pete, there's this conversation is about the consumers and how they'll be affected by some changes that are going on, and just again to provide some education because right now it seems like many people have been on the sidelines just the way that the pandemic has affected the housing industry.
Yep.
So with the lower interest rates during the time and the rising home values, there was a ton of competition, right? And so
Yeah.
there were many people though that were working through their credit during that time frame, and even now there are folks that are weren't didn't really have the opportunity to purchase during that frenzy that are kind of coming out of the woodworks. Is maybe it's the wrong choice of words, but they're coming out,
Mm.
and what we're finding is that um, there is an appetite to do lending, and so some of those folks aren't quite ready to be there. And then when often we look at their credit scores, they'll have like collections on medical and things like that, some student loan issues and stuff. And so I know there's 2 or 3 big changes that are coming up.
Yeah. No, there's going to be three, a couple this summer, and then one next year. So that's going to help. They think it'll help about 70% of people that have any type of medical debt. So it's going to be
Hmm.
some really significant changes. And I can tell you from the last 5 years being in the industry, there really has not been any big updates, um, to the scoring models and things that can help consumers. But they've done some extensive studies over the past couple of years with the pandemic, and really it's shown the glaring things that probably should have been taken care of a long time ago, but at least there is some new laws that are going to be put into place coming up here over the next 6 months. So definitely helpful to help people be able to at least reset and go back and fix some of that stuff that might be holding them down from becoming a homeowner. Because like you were just saying, I mean, whether you bought a house in the past couple of years with interest rates being low or not, I mean, if people are renting right now, I know there's people in my family, whether it's cousins or friends and things like that, I mean, they're having landlords raise their rent $500 this past year. And that's, I mean, rents went up in Arizona and the Phoenix area, I think almost 20% the past 2 years. So, I mean, that's a huge, most people can't afford to pay. If you're paying 1,500 or something, you can't pay 3,000, or
That's
twenty
right.
$100. I mean, to own a home, you can pay 5.5% interest. It's a lot cheaper than paying 2,500 on a small place that you were just paying 1,500 on 2 years ago.
Right, and it allows you to build some wealth too as well.
Yeah, of course.
Um, Definitely. So you mentioned one thing that I wrote down. So before you get into
Mhm.
telling us about the 3 changes, you mentioned scoring model, right? That there hadn't been any significant changes that you've seen over the past few several years, and you mentioned scoring model. Can you tell us what that means? What is a scoring model?
Yeah.
What's being used in regards to a scoring model? Number one, and then number two, just let's just get into the changes that are going to occur.
Yeah. So a couple things kind of unpack there. What's really confusing for people out there in the marketplace is what scoring model they're looking at, and then what if you're trying to become a homeowner, that's completely different than if you're buying a car or if you're applying for a credit card. So start off with most people are really really familiar with sites like Credit Karma. Myself, even if you have credit cards out there to build credit, I have a Chase card, that I go online. They show me my credit score. I have my frequent flyer mile, my American Airlines, MasterCard that I use. Those are the two main ones I use to build credit and get points, whatnot. But when you're going on those sites, either to check your score, they're sending you little emails, whatnot. Those are not the FICO version that a lender is going to have to use if you're going to buy a home, to approve you. So those versions are called Vantage 3.0 versions, or a FICO 8.0 is what they use to, look at your credit to buy a car, or, FICO version 3. There's so many versions now. but those are consumer scores out there. Those are not for the lending model that you have to use yourself, when you're trying to approve people. So for me, I think those are great. I know at least once a year I check my credit, just to make sure there's no fraud, there's nothing on there. You can go to annualcreditreport.com. That's a law by the U.S. government that allows you to do a free credit pull once a year. So I would definitely do that, just to make sure there's no items on there that are not yours. That can happen. So that's kind of step one. But then also know the difference, because so much confusion. Like I said, you go to Credit Karma, you go on your your credit card app, and your score is saying, oh, you're a 680, and then the lender goes to pull your score and you're a 600 or you're a 620, and all of a sudden that causes a big issue. If you're trying to get a conventional home loan, you're trying to get the best interest rate possible, you don't want to pay mortgage insurance, it affects you a lot of ways. And so we'll talk a little bit more about how it affects you, those scores. But overall, you got to know what you're trying to accomplish with what you're looking at with the models. So if you want to get a $500 credit card, you don't need to worry about FICO, the 2.0 or 4.0 that lenders use. So if you're going to buy a car, you're borrowing significantly less money than if you're going to buy a home.
Right.
That's why you're going to see, the easiest way I can tell people is, if, let's say, Shawn, I'm going to lend you $500. Well, I don't need to know your background as much. If I think you're a great guy and, I know you personally, like if I'm going to lend you 500, that's a little different than if I was going to lend you 500,000. Now, if I was going to lend you $500,000, I need to know a little bit more. Like, hey, do you pay people back? Let me look at your past history. Let me, what's your track record on paying people back significant amounts of money? And that's really what credit is. It's a snapshot of, how well do you pay people back? Are you good at borrowing money and paying people back? And so that's why you're going to see, when, Shawn and lenders out there, when they're pulling credit and using the FICO, 2.0 versions for lending, the scores are going to be less than when you go to your Credit Karma or these other sites, because they have to use more stringent rules, because they're looking at different stuff on, can you repay them a big amount of money compared to $500? So that's a little bit of the misconception, and people get upset or get confused. But that's one thing we do a lot of education on.
Oh man, you keep talking and I'm adding something else to your plate.
Great. We can do it. Just write down the topics.
We kind of talked about this last time as well. And so just because, and just so people don't have to hear it from me, and think I'm twisting their arm to get their credit pulled, right? No, you can't pull my credit. You're gonna mess my credit score up. Blah blah blah. Let's talk about that. So, ladies and gentlemen, this is the expert. I feel like that I am too as well, but oftentimes they don't want to hear it from me.
Yeah.
So Pete, how does getting your credit pulled inquiries affect your credit score?
Yeah, I knew right where you're going with that. Something that people just go crazy about. So another big misconception by consumers is when they're going to get a home loan, they don't want their credit pulled, because there's been all this stuff out there that says, oh, if you get your credit pulled, it's going to just trash your credit score. And that's just not the case. So, we have dealt with tens of thousands of customers over the past, years. Every single month, we're looking at thousands of credit reports. But when you do a hard inquiry, which is done by a lender, or when you go to a financial institution to get financing, like to get a car and a lender, it's going to drop the score a few points. So typically in that 2 to 4 point range, but that's it. People think like, oh, I don't want my score being pulled because it's going to drop me 20, 30, 50 points. And then they go and get upset at yourself or, people out there that pull their credit. And it's not that what dropped their score. It's their late payments. It's their collections. It's their high credit card balances that are impacting their score dramatically. So they start blaming other people for the things that are on their credit report or why their scores are low, when that hard inquiry only hurt their score usually like 2 to 4 points. Most of the time you don't even notice that, because scores do fluctuate on a monthly basis. So, paying a credit card down below 30% utilization could help you 20, 30, 40 points a month if you had a few cards that were high and you're worried about an inquiry that's 2 points, So, and if you do a soft credit pull, it doesn't hurt your score at all. So that's another thing. People just have to chill on that.
Thank you. And thank you again. So on-time payments are a proportion of your balance to the credit limit. and length of history are
Yep.
big pieces of the pie that affect your credit score.
Yeah.
So yeah, let's talk about the changes. Let's tell us about
Yeah.
the changes that are coming up
Yeah.
that'll
So
help the consumer.
this is really big. Like I said, three major changes that were announced about a month ago. Been talking to a lot of people about this. I talked to customers yesterday that are using us and had some questions that have small stuff. So number one, they looked at a study of medical debt is the number one thing that's on people's credit reports that's negative in the United States. I mean, just millions and millions of dollars of medical debt. And they did the study and found out that it's usually a one-time small amount, something that happened to you, but either because financial times are tough and people are living, close to paycheck to paycheck and don't have a lot of savings, or something falls through insurance or things like that. I mean, I even had something the other day. I had a light procedure done, a light surgery in an outpatient surgery done. And I had a copay thing that I always pay when I'm in there. And I think the fourth copay of all these follow-ups and all these other things I had to go through, they're like, oh, I got something in the mail that said, oh, you owe $100, which is fine. I mean, I talked to him right away about it, which you should always do. But they're like, oh, I think that's just an error on our side because you always pay stuff when you're at the office. So that just shows you, I mean, things get messed up through insurance companies, through their billing. It just happens. And all of a sudden that pops up on people's credit reports. So things can happen. So number one, they're addressing medical debt that's on your credit report. So change number one is going to be anything that's a paid medical debt. So if you've settled it out to a $0 balance, you paid it in full. Typically, what happens is if you don't get that pay for deletion letter, if you don't negotiate that they're going to take it off when you pay it before you do that, then that can stay on your credit report and actually hurt your scores by refreshing that item for 7 more years. So what they're going to do now is anyone that has a paid medical debt that's on the report right now, hurting them with that negative rating, they're going to remove all those from the credit reports. So no longer am I going to see someone that was trying to do a great thing by paying their debts. They're trying to be responsible. Let's say you paid off 5 debts. Those are still stuck on there because unfortunately you didn't know the credit game and had to negotiate deletion letters before that, which is silly. Those are going to get wiped off. So that's number one. So any debts, then going forward, this is a huge change too. People don't realize. A lot of times you might have a $30, a $50, a $200 medical debt that you would love to pay because it dropped your credit score 50, 75 points. Well, the way the game works now is you have to call companies and collection companies, negotiate that they'll delete it before you pay it. And half the time those companies won't do that. They'll just say, no, sorry, it's your debt, pay it, but we're not going to delete it. And so it ends up hurting you more than helping you to pay that. So a lot of people just leave their debt on there. Well, now if you do want to pay stuff starting July 1st of this year, that is going to be simple removal moving forward. So you're going to be able, there's going to be a lot of new avenues to get your scores up quickly. And really that's the way it should be, honestly. So that's number one. Number two is going to help people, like I just talked about before, that are trying to figure out what they owe, or they're working with insurance companies, or they're working with their hospitals or wherever they have their medical stuff procedures done. Is change number two is right now, let's say you don't pay them for 6 months. On the 6th month, they can report that debt to the credit agencies, and that drops your score 50, 70, 100 points sometimes, depending on what's all on your credit. But if you had perfect credit, in the mid 700s, 800, and you had one medical debt pop up, let's say it's for $50, that could drop you 100 points just because you had perfect credit, but one thing slipped through the cracks. And so now instead of them reporting it on month 6, they're going to have to wait a full year to month 12 before they can report any medical debt. So that gives you a full year from whenever you had your procedure, you had your hospital visit, whatever you had go on in your life. You have a full year to negotiate, to figure that out with the insurance companies, whatever the case may be. So there should be really no reason at all for people to have oh my gosh, a couple of months later, what is this medical debt that I have a collection on? So that'll help. Those two to start out with will help significantly. And then number 3, probably another just as big, if not, those first two, is this is going to be now, I think January 1st. They don't have the exact date, but they said the start of next year. So January 1st, they've agreed upon TransUnion, Experian, Equifax, the 3 main, credit reporting agencies. they're no longer going to report any medical debt that has a balance of less than $500 that's on it. So right now, I just had a client yesterday. She had actually 4 different negative items on her credit report. One was for like 220, 125, 75, and 75 for 4 different things. And all 4 of those are hurting the credit score in a huge way. I mean, down in the mid 500s because of those and a few other items on there. Well, those 4 things, she has a couple options on coming up. She could pay them right now, July 1st, and those would be wiped away immediately. So she could do that in the next couple of months. But those things next year are no longer going to report at all. I'm sure those companies are going to try to figure out a way to get that money, but they can't just report a $30 medical debt to hurt your scores. That's going to be eliminated. So those 3 things combined will help. They said over 70% of people that have medical debt, and there's millions of people that have medical debt that are impacting their scores in a negative way. So massive changes coming up as far as medical debt.
Yeah, I was going to ask you that. So 70% of folks with medical debt, this will benefit.
Yeah, yep. That's
Wow.
what we study over. The Consumer Protection Bureaus and things like that. They do studies. They did a long one for over a year, but they said that's from them. Saying they'll help over 70%. Those 3 changes would.
And we see this a good bit. How often do you see stuff like this? I know you just mentioned you have a client that has credit scores in the mid 500s. She's got a few smaller medical collections on the credit report, and in July she'll be in a much better position because they'll go away. But like, how often are you all seeing stuff like this that are really affecting the clients that you serve?
Every day. I mean, we
Wow.
work with hundreds of clients every single day from all across the country, and we're looking at the reports, and you're seeing medical debt. I'd say almost 90% of people have some type of medical debt that's bringing their scores down. High credit card debt brings a majority of people's scores down too that have low credit in the 500s or the low 600s. It's usually two pieces. Usually it's either 30% of the scoring is your credit card usage. How much are you using? So anyone out there, is a quick tip for you. The quickest way to get your scores to go up pretty significantly is, let's say you have 2 or 3 credit cards and you're using more than 50% of that available credit. Get those paid down to where you're using less than 30% at least, and your scores are going to jump. So that's kind of step 1. And then it's getting rid of the negative items, medical debt, getting student loans caught back up. That's a huge problem. 7 million people have delinquent student loan issues, which we can get into in a second. That's a whole nother topic we can talk about here in just 2 seconds. So some changes maybe coming down the pipeline. And then just knocking that stuff out as much as you can. Every single item that you get fixed is going to bump that score up. But that's what we see every single day.
Got it. So before we get into the student loan, because I was going to ask about that next as well. So the second piece, obviously, you mentioned the credit card utilization. Let's try to keep that 30% or less, right?
Yep.
And then paying off or getting rid of some of the bad debt or delinquent debt that you have.
Yep.
So say I have a collection, I take care of that today. How does that affect my score? If it's not a medical collection, for instance, right? Because we're getting some help with that, but just a normal sort of collection for, I don't know, not turning in a cable box or something like that. I see that a lot, like Comcast or Verizon or something for your cell phone. And I go and I settle that and I pay it. Like, how does that affect my credit when that happens?
Yeah. So the number one thing you have to do is, first of all, once you look at your credit report and see that you have negative items, get a free review done by an expert, because there's ratings on all these items from 0 to 9. It's called the MOP rating system. 99% of the general people out there don't know that. I had no clue what that was until I started repairing people's credit professionally. Most, lenders, yourself, that, but a lot of them don't know that stuff out there as well. And realtors don't know what that is. So the big thing is have a professional look at it. For instance, like we do free reviews at My Credit Guy for anybody. So you can send over a credit report. We'll take a look at it. We'll have a professional go through it with you and educate you at no cost. And then after that, the key thing is, let's say I see Verizon, Sprint, all types of cable companies on there, CenturyLink Internet. I mean, those things I see almost every single day too. But the key is if it's not medical debt and there's no automatic deletion right now, is negotiating what's called a pay for deletion. And what that means is making a phone call to these companies saying, hey, I have some funds that I have available to potentially take care of this. I want to get my credit scores up, by doing this. And you need to have a letter that says, if I pay X amount of dollars to settle this debt or pay it in full, then you'll delete it from the credit agency and the reporting agencies. If you don't have that, unfortunately, most of the time that stuff will stay on the report and it just updates it for 7 more years because it goes by the last activity that you made on an item. So that's the number one mistake people make, I would say, out there by far, is that they're trying to do the right thing, which is great, which is admirable. And a lot of people want to become homeowners and fix their credit, but you can't just start just paying stuff. That's not fixing your credit. That's the biggest mistake you're going to make, is just paying stuff and not negotiating properly. But if you negotiate, a lot of stuff opens up and you can take care of many, many things by doing it the right way.
Yeah, thanks a lot for that. I
Yeah.
say it all the time, and I'm like, no, no, no. They're like, I'm just gonna fix my credit. And I'm like, no, just stop for a second. Don't,
Yeah.
you may make a bad decision, and you're spending money against something that's really not going to help your credit. You actually pay for something that's going to end up hurting you.
Yep.
So let's take a look at it first. Let's determine what makes the most sense.
Yeah.
And for us, if it's outside of our scope, we'll always refer it to a professional that can help them with the credit piece.
Yeah. Before we move on, I mean, it's a serious thing. I mean, we have clients every week that call us, unfortunately, after they've made the mistakes of just paying stuff off without negotiating. And I've seen people that have spent, $10,000 to $20,000, which is a very significant piece amount of money for them.
Lots
That's
of
how
money.
serious they were about, might be almost all their savings. And they're like, I just want to get a house. I'm going to use all the money I have to get my credit up to make this possible. And then they make that mistake. Now it's how are you going to negotiate if you've already paid everything? That's just a difficult. Not much you can do. You can ask for ask for goodwill, but that doesn't go very far when it comes to the credit game, because a lot, unfortunately, just don't care that much once they have their money. So definitely, like you said, review it, get a professional look at it. It doesn't cost you anything to do that. And then, make the right decision on where's the best spot to use my money to get my scores up.
Got it. Thanks, Pete. A few more things. Student loans, more than medical collections. I don't know about you, but I see delinquent student loans a good bit. So like
Yep.
more often than not, we'll have professionals that have really honestly really good credit. Like they've paid everything on time. They may have higher balances like on credit cards or something like that. But
Yep.
more often than not, uh, I'm seeing like delinquent student loan debt that's seriously affecting credit scores. And so I know you mentioned earlier that there's 7 million people that has some delinquency on their student loan.
Yep.
What could possibly happen, or what's potentially on the horizon? I know we don't know for sure what's going to happen or if it's going to happen, but based on your expert and professional opinion, what are you seeing out there that could possibly happen to give folks some relief in regards to the student loan piece on the
Yeah,
credit?
so there's some stuff coming up this fall. It's going to be maybe in October. President Biden and his office basically they've drafted up a few things to help people with student loan debt. Obviously, it's been pushed back for years now, which has been a big help, to delay payments. But there is, over 7 million people that have delinquencies that are currently behind. They have late payments on there, all that stuff, which is negatively bringing down their score. And typically, to get stuff out of delinquent status, out of the negative status to bring your credit scores up, what needs to happen is you have to contact the U.S. Department of Education. They send you a packet. It's not scary. People think it's like very scary to like try to, if they owe tens of thousands or they're way behind, all they have to do is get a hold of the U.S. Department of Education once everything's up and running and fill out a packet based on, your income and expenses and what your life is looking like financially. And they'll work with you to put a repayment plan together. And I've seen people that have payments that are $50 or less sometimes per month to get back on track. They might owe 100,000 or 50,000. So if typically they want to see a year of on-time payments, and then they'll take you out of collections or out of delinquent status and make it current, which brings your score up significantly with the credit scoring system. So what they're going to do, they're proposing to do, this is not official law yet, but it was I read an article about a month ago from a good source. It was in the document from, the president just saying, hey, we want to do, and this is not a law yet, I will stress that this is not 100% done, but what they want to do is potentially have called a quote unquote fresh start program for those 7+ million people that are delinquent on student loans. And what that means is you're going to have, there already is these programs, but they're going to stress them again. Hey, here's the repayment income based repayment structure. So it's not going to kill you. It's just based on what your financial situation is. But if people start doing that this fall, which they're hopefully planning on doing, then the minute you start those payments, if you're in the restart program, they're going to automatically take you out of delinquency right away. You're not going to have to wait 6 months, a year plus to make on-time payments. They'll just eliminate everything that was delinquent and you'll be current. So that right away is like a humongous switch for all those people that, like I said, millions of people, over 7 million that are delinquent. They could easily, if they are serious about fixing their credit, becoming homeowners or just having a better financial situation, man, I would pay, based on your financial situation, it's not going to be that much per month to get back on track right away, month one, instead of waiting a year potentially.
Yeah, because you have to make 6 to 12 months, I think, on-time payments before they'll, adjust anything once you have delinquent student loans.
Yeah, they'll take it. Sometimes it's 6 months, but I mean, technically they want a full year of you
A
making.
full year.
I mean, they could take you out whenever they want, 6 months into it, but a lot of times they want a full year of repayment before they take you out of delinquency. So it could be from the jump, month one coming up this fall. So definitely, I would watch for those things. I'll definitely announce it once it becomes official, but that's in lots of stuff here for coming up this fall. So really good, a lot of good changes coming up to help people out there. If you are, really serious about fixing your credit and becoming a homeowner, or just in general, there's so many things that impacts your life. Credit does, which people don't realize, but there's good changes coming to help a lot of people out there, millions of people. So
That's awesome. So, yeah, speaking of changing your life, like Pete, like you mentioned earlier, the credit game, right? And so I wrote credit game with an exclamation point,
yeah,
right? It's expensive when you don't know the credit game.
yeah,
It's very expensive not to have bad credit. And so I always think back to some poor decisions that I made in college. I look, in hindsight, they were good decisions because it was largely survival skills,
yeah,
and I just didn't know. I didn't understand it. Didn't really grow up with the mindset of understanding. There wasn't a lot of education around it. There's more now, but not a lot of education at all. And so those poor decisions that I made in college, Pete, led me to having to get a subprime loan on the first house that I bought,
yeah.
right? And it also led me to having a double-digit interest rate on a car payment. You
Wow.
kidding me? Like that's a lot. Um, and so I learned the credit game through that whole process. Is because like I had to sort of, what's the term, bite the bullet, so to speak, and
Right.
do that in order to improve my credit. So like I said, it's expensive to do so, and I knew I had to play the game in order to get at least where I am today,
Yeah.
which there's no looking back. Like I'm pretty paranoid about my credit, and I'm checking it all the time, and I'm got these alerts and stuff like that.
Yeah.
um
All right.
but I say all that to say it's very expensive to not understand the credit game. And so you all have some tools that you've pulled together, and I wanted you to talk a little bit about that. And we'd like to try to get this out to anyone that's looking to get more information on it. But I think you have, like, it's a handbook for credit for beginners. Is that what it is?
Yeah. So the title of it is Credit for Kids. And really we could have called it, Credit for Beginners or Credit 101, whatever the title is. The whole point of it is to help people with financial literacy, because it's something that's not taught to us when we grow up, for sure. You're not going to learn that in grade school. You don't learn that in high school. I was never taught one thing about how to build credit or how credit impacts my life in high school or college. When I, graduate with, great GPA, went to school for, LPS, law and political science, and I learned nothing about credit and how it affects you. And credit affects every single person in the United States, as when it comes to, think of all the things that credit does affect. And this is, it's a 25-page ebook. Like I said, it's called Credit for Kids, but I literally recommend it to any single person to read. And if you don't know it all, which most people don't, it's just super important, because I wish I would have had this ebook basically when I graduated high school or I was in college, or even for first time, if you're trying to buy a home or know nothing about credit, it is absolutely critical that you just know those simple things. And we break it down really to go through is what is credit? Why is there credit? How does the credit cycle work? Because that's important to know, just why it works. And we talked about some of that stuff about the different versions of FICO, how it affects you when you go from, trying to get a credit card, owning a car, buying a house, or getting any type of financial help. It definitely helps you, obviously, when you get a home loan. That's what most people want in their life at some point. You can go into this, I'm sure you have in many of your shows, but your interest rate is going to be super tied to your credit score. Mortgage insurance, that every 10, 20 points, that can, go up or down or go away altogether. That can save you 5 years of mortgage insurance by having a better interest rate or better credit score. Sorry. So that's one thing, is housing. Another thing is just getting financing for a car loan. Like you said, I mean, would you rather have a double digit or 5, 6, 7%, or would you rather have 2, 3%?
or 0% nowadays?
Yeah, crazy, right?
Yeah.
So that's another thing. Borrowing money for student loans. I mean, when you go to school and apply for student loans, interest rates on student loans are, were crazy high at some point. I know people are paying 8, 9, 10% student loan. That's unbelievable to when you have borrowing a lot of money, but you're saving money on getting financing for student loans. Another thing is, your insurance rates. Every single person has insurance, car insurance. People get all types of different types of insurance out there. Helps you save money on that. Getting a job is a big thing. I don't think a lot of people realize, but when you're applying for a job, people can look at a credit score and say, well, I can't give this person a finance job, or I don't want this person to be my CFO of my company because they have a 550 credit score. So if they can't pay their bills at their home, man, I can't put them in charge of running a massive organization or a big company. So that's another piece. I mean, there's all types of small other ones out there, but anything has to do with finance is going to affect you, getting jobs, getting opportunities. But we go through that. There's about 10 things in the ebook that we go over that how credit affects your score. And then part 3 is going to be going through how the scoring algorithms are broken down. So, really, we won't dive into that today, but, there's 5 main ways that, a credit score is, basically put together. So understanding all those pieces, what should I be doing if I'm in high school or, in college and starting to build my credit? The earlier you start building credit, the better, because you'll find out, payment history is the biggest piece of the credit pie, really, if you want to call it that. So for me, luckily, I had 2 credit cards when I was in college. I still have those open, so now I have 15, 20 years of credit history. So if I want to get into the upper 700s and above, you got to have that. It's a big piece to have stuff open for, 5, 10. They want to see 15, 20 years, when you get as high as possible. So lots of little tips like that, let you know where to go to get a free credit, report every single year. So we put a lot of really good time and effort into it to make sure that people are educated. But if you understood that document, which is really, I say 25 pages, but it feels like it's like 10 because it's just broken down really easily and digestible. If you go through that and understand credit card utilization and how the scoring algorithm works, that's going to put you light years ahead of somebody that knows nothing. And they go out there and, like you said, they're paying crazy interest. They're maxing out credit cards. They're opening up more of them. They're just putting themselves in this like cycle of never be able to become a homeowner or ever to get good financing out there. And once you get in that, like you had to do it, hard knocks ways really, but it's most people never recover from that. We have a stat in the ebook that says once you get 90 days delinquent on an item, only 18% of people ever catch up.
Wow.
That's
Wow.
if you
So I'm a unicorn, man. Is that what it
you're
is?
a unicorn. Well, you're one of the 80-some%.
Wow.
But it's like, only 18% ever catch up after a 90-day delinquent. So it's like, once think about that. Now that's one item. What happens when you have 3, 4, 5?
Yeah.
Now you can't get good financing. Now it's just now you can't pay more bills. Now it just snowballs. And
Dude,
you're
I was gonna be a millionaire when I walked across the stage to get my undergrad degree, Like it's like I'm gonna get a job, it's gonna pay me, 7 figures easily, right? And for me, it was just like I'll pay them back when I get my first check. And then, I remember my first job, it wasn't quite 7 figures,
yeah,
not near that amount. And so I'm like, man, you gotta do something and get it right. And so yeah, it was tough. Like you said, hard knocks, and recovering from that was really hard. And I spent a lot of money and wasted a lot of money doing that as well. So you're absolutely right. Ladies and gentlemen, when you get your credit together, do your very best to keep it there because it affects so many things. So many things.
Yeah, so let us know. I mean, if you want a copy of that, Shawn can get that to you. He has a version of that, a PDF version that you can take a look at. I'd recommend every person read it. I mean, especially if you're someone that's in high school or college or a beginner and wanting to fix your credit, start there. Read that so you don't just make the same mistakes over and over and over. Because that's one of the biggest things at My Credit Guy is we want you to understand the concepts and understand why credit the way it is in the game, like I always call it, so you don't continually make the same mistakes. Because without education, people are bound to make the same mistakes over and over and over until they truly understand it. So I would start by reading that, just really, it'll take you 10 minutes to look through that and really understand it. And then after that, get a free credit review done, have a professional look at it if you do have some issues, and then take the steps. There's just steps you got to take to repair credit, but it's not overwhelming. And, usually within, 3-4 months, we have people where they want to be.
That's awesome. Thank you, Pete. Thank you. So before we get into the last question, and I'll let you go.
Yeah.
How do we connect with you or My Credit Guy? Like, what's the
Yeah.
best way to connect?
Yeah, so I'm always happy to talk to people. If you want to reach out to myself, my email, pete@mycreditguy.com. Number one, too, like I always tell those people, is get your credit pulled. It doesn't impact your score more than a couple points. Reach out to Shawn. If you're trying to buy a home, for sure, you want to have a FICO, 2.0 or 4.0 version pulled so you know exactly where you're at. So I'd rather have a version that's accurate, to match up your goals. So, I go to Shawn and get that credit pull done. Minimum look at your score, and then if they want to reach out to us, that's great. So
Nice, thanks for that. So pete@mycreditguy.com.
yep.
And we'll get that posted in the comments in a second. So here we go. I don't know if I told you this one. We didn't do this last time.
I
So
have
but
no
if
idea.
this last question, my bad, Pete, I forgot to give you a heads up.
Let's do it.
You'll knock it out of the park, though, I
Yeah.
promise you. So like that 300-yard drive
There you
that you hit.
go. Quick fire questions. Bring it. Let's do it.
Yeah. So you get one person, one question. One person, one question. Who would it be and what would you ask?
Oh man, that's tough.
Yeah, I know. I apologize, but you got it.
One person, one question. Man, that's difficult.
Who's your favorite basketball player?
Michael Jordan's my favorite basketball player. So that's one person that popped in my head. It's tough when it comes down to one, though, to ask one question.
So why'd you get into political science and law?
I just really enjoyed it. I always joked a lot too that I probably read too many John Grisham books. That was my favorite author, just the the thrillers when I was younger. So
There you go.
I love the book. So that actually I always joke, but it was pretty true that's why I liked, taking law classes and got into that.
Have you met John Grisham before?
I've not met him, but I have a lot of his books right above me here, and Michael Jordan, and lots of other, a lot of my favorite business books too in life. But number one, I probably, if I could meet with someone, I always like to pick people's brains and ask them, what's, best type of advice they ever got, or things, what really drives them or motivated them. So those are questions I usually like to ask people. Or when I read books, I really like to dig into autobiographies of people to kind of, take little pieces that can make myself better. I have, the Bible up there too that I read every single day, and that popped in my head right away too, of just, what's the way that a better way for me to be living and to help more people, really. Just to me, living every single day. If you can help somebody, to me, it's not about, how many zeros are in the bank account. It's about how many people you're helping, how many people you're impacting. And, that's what really sticks with you, as you move forward with friends and family.
Yeah, that's awesome. You dodging my question though, man. Let me get one.
I don't know. I don't know the answer to that, man. I don't know.
Oh man. All
I'll
right.
come on. I'll come on episode
So
200.
we got to get you back on episode 200. So
Episode 200. I'll
I
come back ready to fire on that. We'll spend like 5
got
minutes on that.
got it. I'll hold myself accountable for that because I didn't tell you that on the upfront. So, but no, that's cool though. You had a few names though. I didn't realize that's interesting about John Grisham. I have a friend who same way reads a lot of the John Grisham stuff and a bunch of like espionage books and things like that. And so yeah, I could see that. But no,
Yeah,
thank
I love all types of books. So it's, I read those once every couple months, but I try to read a book, once a month just to always, just be fresh ideas. It keeps you creative. I read
yep.
a lot of business books. I like, reading about people and sports. I love sports, but more importantly, I think it's, just learning little pieces of things that might be able to help yourself or help somebody else, along the way too. So it's, always good to keep learning and keep growing and go from there.
Yeah, you just gave me a nugget. I don't think I've ever asked it in this way.
Mm-hmm.
And you said, what's the best advice you've ever received?
Yeah.
Like, yeah, I've never asked anybody that question before that I can remember.
Yeah, I asked a lot of people that, what's the best advice you ever received? And, I think for me, it's from my father. He's, a hero of mine, someone I definitely look up to. And, he's just a great human being. I can't say he's my dad, but so maybe I'm biased, but I met a lot of people. And, for him, I think the number one thing is just to, he's always taught us, we were young and even getting older, is just always remember, everything you do impacts other people in certain ways too. So always, work with integrity, work with character, do things the right way, don't cut corners, and that's something that I always try to do every single day is do it with integrity, do it with character. One thing can really bring that down pretty quickly. So make sure you always do the right thing, whether it's going to help you. But sometimes you have to make tough decisions that, hey, if it's not the right thing to do and it's not with integrity, you just got to not do it. There's a lot of people that will do stuff for money and do stuff for, positions and do stuff to get ahead. But in the end, it's, that can impact other people negatively and definitely yourself too. So
That's all. That's awesome, man. Thank you for that. And so, Pete, I'll ask you to hang on for a quick second as I wrap up. Everyone, thank you. Thank you so much. It would be such a shame for me to have folks in our network like Pete and not share them with you. So just continue to watch our show, like and comment, watch the replays and such, and connect with Pete as well. And then also, if there's anything that we can do, anything whatsoever that we can do to help you in any way, please don't hesitate to reach out. Try to remain as safe and as healthy as possible during these times. And, we'll be back next week. And Pete, I really appreciate your time today.
For sure. No, I appreciate being on, love being on with you, man. And I look forward to episode 200, down the road.
Let's do it. Let's do it.
All right. We'll see you later, Shawn.